Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Tech stocks weathered the worst day in over 2 years. It was a rough one, but Nasdaq CEO Adena Friedman says it's just part of the game.
Our index business is up 29% year over year, so there has been strong progress. But every day is a little bit of an adventure in the markets, and this week we've seen a fair amount of adventure.
An electorate recharged. New polling shows a renewed vigor among voters. Change Research lead analyst Betsy has the numbers.
Rarely do we see shifts of this magnitude. In fact, it's exciting.
And assigned seats, business class. It doesn't sound like Southwest, but Phil LeBeau says it is. Change is coming for the airline.
Southwest clearly believes that assigned seats and business class seats with more legroom is what their customer base will embrace.
Plus, the NBA scores new media rights, and election investing stress got you down? CNBC's Sharon Epperson has some tips.
I talked to a few financial therapists about how to keep election jitters in check and what to do to emotion-proof your portfolio.
It's Thursday, July 25th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the Nasdaq market site in Times Square. I'm Becky Quick along with Joe Kernen. Andrew is off today. We are getting ready for the Olympics. You had soccer, you had rugby, you had water polo taking place yesterday. You had a little bit of some riotous situations that they took care of already, but things are heating up and getting ready for the opening ceremonies coming up on Friday.
Nice front page piece on the Journal about what France is trying to do in terms of security. Never been this threat to Olympics turns Paris into an open-air fortress. So we got that going for us. The Bears in tech stocks won a gold medal yesterday. Do you not?
I think they probably did. Technology stocks really taking a beating yesterday. The worst level we've seen since 2022.
October, I think.
Worst day, worst performance coming down since 2022. But it was the S&P and the Nasdaq that were the worst performers yesterday. Yesterday, the Dow was down by more than 500 points. But again, it was the relative winner. It was a decline of just 1.25%. The S&P was down by 2.3%. You had the Nasdaq down by 3.6%. And all of those losses followed some pretty underwhelming reports from two mega cap tech companies, Alphabet and Tesla. They were down 5% and 12% respectively. These have been some of the stocks that have been great performers, and that is not the case for what we saw yesterday. All of the major tech stocks fell yesterday in sympathy. You had Nvidia down nearly 7%. Meta Platforms was down by 5.6%, and Microsoft was down by 3.6%. We'll be getting more earnings next week. Microsoft and Meta be wondering what they have to say about things. Amazon, what they've got to say about what's been happening with the cloud. I was just talking with Steve Kovac, and he was bringing out if those companies say what we heard this week already from Alphabet, just in terms of the cloud, you could be facing some issues. His point was that for Alphabet, they spent $12 billion to win $10 billion in revenue from what they were getting in the cloud. So it's all of this hope for AI that has not materialized yet in terms of profits and sales. So you got to wonder how long investors are going to say, OK, we will continue to wait and see what happens.
That's the big question is you're putting a lot of money in, and are we sure it's going to pay off? And then just heard Steve talking about Sundar, who said, I'd rather spend more than less, than not enough. And it's just,
you don't want to lose the race, but you also don't want to be in a position that Meta was in.
But you don't necessarily want to be
Facebook to Meta,
following everyone off the cliff. Right. Everyone else is doing it, so
and I was thinking, is this going to be like when Facebook turned to Meta, did that spending and was told no, you can't continue
or
to
just
spend
like 99,
or is this different?
Or like 99 in general, where we got so excited, and it was a huge deal. It changed the internet.
Oh, the dot-com bubble.
Yeah, and the internet changed our life, but something got ahead of itself.
The players that were there,
Pets.com. Puppet.
Sock puppet.
Yeah. Shares of Chipotle, Mexican grill, are higher. Earnings and revenue both ahead of estimates. And same-store sales rose a lot more than analysts had expected. Traffic to the company's restaurants jumped by 8.7%, despite backlash on social media fueled by customers who said their burrito bowls are smaller. shrinkflation. The company has denied reducing its portions, but is now training employees to ensure that food items are made consistently and correctly.
I don't know if you've seen, there are all kinds of hacks for trying to get them to give you extra scoops. There are people who do this on social media.
No, I didn't know
with
that.
Videos to say, okay, here's the way, if you order it in this way, and then say, I want this, but I don't want that, and then you can get extra large portions of it. So the company is probably trying to make sure that it's consistent throughout, instead of being able to hack the system.
The one trick I know is that you're supposed to ask for French fries without salt. And then they got to make them brand new, and they come out steaming hot, and then you
you have no salt.
No, then you put your own salt.
I like the way they salt.
Even extra salt. Well, you could do that. You just put a lot on.
I don't want that much.
But that's the only trick I know. But, don't mess with my burrito bowl.
There have been some angry videos that have gone out where people say it's not enough, you're not giving
My problem with Chipotle is, I need to take a half hour, 45 minutes, and set it aside in the one in where I live.
To get through.
Yeah, to get the food. And, it's okay. Too much cilantro.
Like Yogi Berra. The place is too crowded. Nobody goes there anymore.
It's either that or the people are, I don't know, they're slow. CEO Brian Nickel said on the call that we have leaned in re-emphasized generous portions. Do we all need generous portions across all of our restaurants, as it is a core brand equity of Chipotle to make you fat? The company said it's gaining market share and that its transactions grew across every income level. That bucks a trend from companies like McDonald's and PepsiCo, which have said in recent months that low-income customers are pulling back on spending. The long-rumored NBA media rights deal was announced yesterday. Disney, Amazon, and our parent company Comcast will collectively pay more than $76 billion over 11 years to secure broadcasting and streaming rights for games. The NBA rejected Warner Brothers Discovery's rival bid that would have kept games on its TNT network. Warner Brothers responded, saying it believes that the league has grossly misinterpreted its contractual rights, and it's going to take appropriate action, so expect some lawsuits to come. The new deals also include some WNBA games, and the value of the WNBA portion of the deal is reportedly $200 million per season. So that's kind of weird. More than 3 times the current deal, but figured out. I mean, 11 years, that's $2.2 billion out of $76 billion. So
but it's
I hate to say it. I know, but it's an NBA. I know it's nice that we added that, but it's definitely an NBA story at this point. And the story, what I got out of that story was reading about Peacock. Peacock's going to be able to proprietarily, I don't know how many games that they're going to stream, but remember they did the one NFL game last year, and when Comcast reported earlier this week that said, the Peacock subscribers are still up 38% from last year, but kind of sequentially.
But now you've got the
But now this is a tentpole.
Well, you have
it's a tentpole, the Olympics too. But to have this for 11 years, you're going to need, if you want to watch these games, you're going to need Peacock, I think. So this is great for, obviously, for the parent company.
And you understand why Zaslav is so eager to go after and try and hold on to it.
They said that I know that, and I love David, but I don't know. They're saying that it's not nearly as lucrative as the deal that they arrived at, what Warner Brothers was offering. And I'm not surprised. Those are three well-heeled.
It's the right to match the offer.
Right.
And was that
was it really a match?
Well, yeah, but the question is, are they allowed to match with the streaming rights? And that's what the question comes down to. What I will say is Amazon put in a poison pill where they agreed to put the entire amount that they'd be paying in escrow, more than $5 billion, thinking that TNT would not be able to match.
You want to try and compete with Comcast, Amazon, and Disney?
They're competing. They're saying that they should be able to match the Amazon portion of it. Amazon put in a poison pill. I don't know why they would bother putting in the poison pill if they didn't think there was an opportunity for Warner Brothers to come back and do this. So there is going to be some stuff that plays out, legal action that takes place. Yeah, that takes place with this. But all it does is just tell you how valuable these properties are and how much people are willing to go after this content. Southwest just announcing some big changes, and Phil LeBeau joins us right now on the Squawk Newsline. Hey, Phil.
Hey, Becky, this is a dramatic change in the way Southwest Airlines plans to do business starting next year. The company, for the first time in its 57 years of flying, will be offering assigned seating. It will also be offering, for the first time ever, business seats, business class seats with extra legroom. So you're looking at a differentiated cabin as opposed to everything that we've seen since 1967 on a Southwest Airlines plane, which is one type of seat throughout the entire plane, no assigned seatings, but that is now changing. Clearly a response by the Southwest management to the pressure that they're facing from Elliott Management, the activist group, which has said, look, these guys can do better. They must do better. Bob Jordan and Gary Kelly should be fired. That's the opinion of Elliott Management. But again, a dramatic change from Southwest Airlines. Starting next year, it will be offering assigned seating as well as business class seats with extra legroom. Guys, we'll send it back to you.
Hey, Phil, Southwest has always kind of lagged behind any of the other airlines, and I think proudly so, proudly saying we're not going to charge customers for these things. What you see is what you get. I remember I was interviewing Herb Kelleher when the very first of the big three airlines, I forget which one it was, raised, all of a sudden said that they were going to be charging you to bring your bag on, or to check your bag. I forget if it was $25 or $50 at the beginning, but at the very first time, somebody came running in while I was sitting on set waiting to talk to him about this, and we told him the news. He said, no way, you're kidding me. He laughed and thought that that was going to be the way that Southwest stood out. And for a long time, I think it was. Just the idea of no frills, we're going to keep the costs low. We're not going to bilk you on all these other charges around the edges. This is kind of the last vestige of them holding back and not getting on board with this, finding other ways to find revenue. And this push coming right now from investors to say, we want more, just some really interesting transformation along the way.
Look, Bags Fly Free has been wildly popular for Southwest Airlines, not just as a marketing term, but also as something that Southwest customers, the loyal customers, they love that they don't have to pay for their bags. But you hit on the key point. We are in an era now when it comes to the airlines where revenue generation has to be front and center. And as part of that revenue generation, Southwest has been forced to say, what can we do? If we're not charging for bags and we're not going to try to nickel and dime people with ancillary charges, which is what you see on the lower end of the airline market, what is it that customers want? And Southwest clearly believes that assigned seats and business class seats with more legroom is what their customer base will embrace. And I think that there's probably some valid arguments there that there are people within the Southwest sphere of customers who would like that, who fly for business and are probably like, you know what, I'm not crazy about standing in line here, even if I can board early. I got to go from one place to another, and I want to know that I have a seat that's waiting for me. And that's what Southwest is banking on. And don't forget, Elliott Management is putting immense pressure on Southwest to make these changes. Not that Southwest was not going to try to increase revenue. It was already down that path. But this is the world that they're in right now, and that's why you're seeing these dramatic changes.
All right. Thank you, Phil. Shares of Viking Therapeutics soaring. The company said its obesity drug is advancing to phase 3 trials. Everybody needs an obesity drug. Shares have surged since the beginning of the year.
Thank you.
Get
right on it.
Every company needs an obesity. Following positive.
Everybody.
Yeah, everybody. Well, many people in this country. Positive early trial data and notes by some analysts who said Viking's weight loss treatment could be best in class among injectable drugs. Best one. That includes Lilly's Zepbound, Novo Nordisk's Wegovy, both brand names at this point. Viking, for people that actually have diabetes instead of just weight loss. Viking also plans to begin a phase 2 study for an oral version of the drug later this year. But I'm just telling you, what still works is you don't eat anything that you want to eat. You eat everything that you don't want to eat. And you will lose weight. You never feel full because you can't have anything you want. You can't have bread, crackers, pasta. Just name something you want. I mean, you can have a little cheese, but you can't put it on a cracker.
So can't
have any
vegetables?
You can do that. You can actually put it on
celery.
You can put it on like peppers or something like that. But you never feel full if you don't have carbs. If you don't have carbs, you never feel full.
I will tell you, I found a really cool recipe. Cottage cheese crackers. You just make them with cottage cheese and you flatten them out on parchment paper, put some Italian seasonings and different things on it. That's it. But they're crispy, so you could use that.
I have some. My wife has got a recipe to make everything bagels that aren't made out of flour.
Really?
Yeah, they're made out of yogurt and something else, and you put the everything bagel stuff on them.
Yeah.
And
you can put the everything
and you
bagel
bake
stuff
them
on
and
the
it tastes.
cottage cheese and it will.
Yeah, well, I don't eat cottage, curdled milk.
No, but it's if you flatten it out and bake it, it makes a cracker.
Pistachio nuts. Just because it's kind of like snacks, but you don't have to eat that many of them. Yeah. But you need to lose weight, not for the way you look. Not you. People in general need to lose weight, especially as you get a little bit older.
As you get older, it's harder.
Because everything bad I can do 5 things. I can do apnea, diabetes, high blood pressure.
Cancer is related.
Asthma, every single all these pills that you got one of those little things where you got to put 6 things in there so you don't screw up.
Yeah.
You won't even need one of those if you lose weight with the smaller
why these
burrito.
GLP-1s are
smaller burrito bowl.
Right. GLP-1s are so hot right now. Too.
That's right. But I don't want to do that. I'm not going to do that. Not going to do it.
Cheese will be next.
Coming up on Squawk Pod.
When we vote, we make history.
The Democrats' new candidate for president, Kamala Harris, has just 2 weeks to vet and select a running mate. New data from Change Research on the new race.
23% say that they are excited about the possibility of Transportation Secretary Pete Buttigieg being Kamala Harris's running mate. But not too far behind is U.S. Senator from Arizona, Mark Kelly, with 20%.
Welcome back to Squawk Pod, today with Joe Kernen and Becky Quick.
Stand by, Joe. His mic, cue.
New polling this morning from Change Research on the race for the White House in the wake of President Biden's decision not to seek a second term. Joining us now, Betsy, Change Research lead analyst in 2020. Change Research was shown to be among the most accurate polling in battleground states. For the latest poll, a total of 2,137 interviews were conducted with registered voters from July 22nd to the 24th. The modeled margin of error is 2.4%. And here are some of the results. If the election were held today, who would you vote for? This was before the debate on June 27th, and former President Trump was up by 4 points. A month later, in the 2024 election were held today, who would you vote for? Harris, 44, and Trump, 43. And that's not totally different than what we've seen, Betsy. I'm looking at the RCP results from today. And confirming, or at least similar to yours, was the Reuters Ipsos, which had Vice President Harris up 2. But immediately, I think you saw this, people said, all right, the sampling of that group, there were 402 Democrats and 361 Republicans that were sampled. Do you have the same breakdown in yours? Do you know how that broke down in your sampling? How many Republicans versus how many Democrats?
That's a great question. And we don't really know what the electorate will look like in November. It's one thing that's really reshaping right now in the wake of Biden's announcement that he's withdrawing from the presidential race. And so we're trying to model what we think that electorate will look like. We're seeing increased motivation among some key groups of voters. In fact, 44% of the registered voters that we interviewed are saying that they're more motivated to vote in the wake of Biden's withdrawal and Harris's near certain nomination. So I think all of us pollsters are doing our best to predict what that likely electorate will look like.
I was just asking whether you knew of this poll that you just told us about, where Vice President Harris was up by 1. Do you know the political affiliation of the sample that you use? Here's the reason I ask. If you look at the RCP average today, the CNN, the average is Trump up 1.7%. CNN up 3, NPR up 1. As I said, the Reuters poll had Vice President Harris up 2, but then Quinnipiac, Trump up 2, M-Consult, Trump up 2, Yahoo, it was a tie, Forbes, Trump was up 6, CBS News, Trump was up 3, Fox News up 1, Trump was, NBC News, Trump was up 2, Emerson, Trump was up 6. So the Reuters poll, you could call it almost an outlier, but not an outlier, but they did oversample Democrats. Did you oversample Democrats in your poll?
We did not oversample Democrats, no. So, and I think one thing that's really important to wait on.
What were the numbers of the 2,000 that you did for political affiliation?
We don't ask people's party affiliation, but we do ask who did you vote for in the 2020 presidential election. What we're finding is that is a key variable in addition to other demographic characteristics, geographic characteristics that help us understand who the likely voters will be.
Yeah, definitely. Definitely a lot of
similarities across all the polls.
The enthusiasm is matched now. That was a problem with Biden, and it's definitely, Trump voters were much more enthusiastic, but now maybe even on Democrats, they may even exceed the enthusiasm.
Well, I was just going to say, when you ask them what they voted 4 years ago, then you try and match it up for even number of Biden and Trump supporters from 4 years ago?
That's exactly right. Yeah, so Biden won nationally by roughly 4 points. That's what we're seeing in our polls. I'm sure that's what the other pollsters are seeing as well.
How often do you take these measurements, and how often do they change? I guess I'm looking for a VIX measure, a volatility measure, as we would say, for the stock market.
Sure. Yeah, we're measuring all the time. Rarely do we see shifts of this magnitude. In fact, it's exciting to see, frankly, as a pollster who's been measuring this race that has been largely stagnant January through up until the June debate.
Do you there was an interesting, I think I saw it I read so much, but Buttigieg is still the favorite of the core Democrats, right? And although Mark Kelly is getting a lot of attention as well. What do you think finally happens there? Do you have poll numbers on what should happen, Betsy?
We do. Well, we do. I think there are a lot of considerations that go into selecting a running mate. Among voters are excited. 23% say that they are excited about the possibility of Transportation Secretary Pete Buttigieg being Kamala Harris's running mate. But not too far behind is U.S. Senator from Arizona, Mark Kelly, with 20%. I will say that Mark Kelly's support among voters is more regionally specific. It's more driven by voters in the Southwest, voters in Arizona.
Yeah, there's a lot that goes into it, right? You don't necessarily want to take a popular senator away from a state necessarily, or a governor. Pennsylvania is such a
tricky
huge
decision in Arizona, absolutely.
Right, and if you could guarantee Pennsylvania for Vice President Harris, that would be an important thing to do too. But then you got all the implications of taking a popular governor out. Betsy, we appreciate your time. We'll see you again, I'm sure.
Next on Squawk Pod, the Nasdaq's worst day in over 2 years, but 2 big IPOs, including the year's largest, just this week. How Nasdaq CEO Adena Friedman is watching the initial public offering window in 2024.
It has been a slow progression this year, and I think that's really still the result of the monetary policy, the cost of capital still being high.
You're listening to Squawk Pod from CNBC. Here's Becky Quick.
Nasdaq's second quarter results out this morning with a beat on both the top and the bottom line. Earnings came in at 69 cents a share. That was a nickel better than the street was expecting. It came on revenue of $1.16 billion. And joining us right now is the Nasdaq CEO and Chair, Adena Friedman. Adena, thanks for being here.
It's great to be here.
So it looks like a big part of the strength in your earnings came from this demand when it comes to fintech, just for things that you guys have been offering when it comes to fraud protections and compliance issues.
Yeah, so we're really proud of the results for the quarter. We had 10% growth overall. a 29% growth in our index business, and then 16% growth in our fintech business. And that, of course, has been an area that we really focus on strategically. And as you mentioned, we have our anti-financial crime business, which grew 24% in the quarter. And then we also have the acquisition of Adenza, which really is Calypso and Axiom SL. And together, they grew over 20%. So it's been just a really, really exciting quarter for us. I think that the demand from our clients has been strong. We had 67 new clients sign up for our fintech solutions, 100 upsells, and then 4 cross sells, which is really starting to show the power of the platform. So we're very excited about that. And then we're also innovating. We're bringing more AI into our products. Every quarter, we're launching new capabilities to streamline the processes that our clients go through and the workflows they have.
Let's talk about AI. What specifically can you do now that you couldn't do, let's say, a year or 2 ago?
Well, I think we've had a lot of algorithmic AI capabilities within Nasdaq for quite some time, but of course, Gen AI has been an area of real focus. So what we look at is how can we make the workflows for our clients more efficient? So within anti-financial crime, we've now rolled out across, I think it's about 250 of our clients now are using this tool that really helps take down the time to research potential criminal activity and research entities within their banks by about 90%. And so it's really exciting there. And then we also have a new tool that we launched in our investment platform that summarizes the meeting minutes from pension boards, which then allows asset managers to kind of look at understanding the strategies that they might be partaking, and it gives them kind of a leg up in terms of their sales opportunities there. So those are the types of things that we do to try to enable AI inside the products.
Your chart looks great for the year. 1 year, a gain of more than 23%. We've seen a lot of activity, a lot of excitement about IPOs coming back, and you've got the biggest IPO of the year that's happening today here at Nasdaq. But it comes a day after we've seen the biggest drop in tech stocks since 2022. And it's got people a little bit on edge. I mean, it's been remarkably calm. It's been remarkably steady in terms of the upward climb for technology stocks, too. What do you see right now in terms of demand for IPOs and where the market stands?
Yeah, so we've seen a slow progression of IPOs coming back into the market. We're so pleased to have Lineage come and IPO on Nasdaq today. So very excited about that. We've had a good week also with OneStream and going public yesterday. But it has been a slow progression this year. And I think that's really still the result of the monetary policy the cost of capital still being high, trying to understand when monetary policy could kind of take down the cost of capital, as well as just the overall environment around us continues to be very dynamic. Generally, though, if you look at our index business, I think it's kind of a good bellwether. Our index business is up 29% year over year. So you still, as you mentioned, there has been strong progress. But every day is a little bit of an adventure in the markets. And this week we've seen a fair amount of adventure.
I mean, it's such a strange situation when you look at IPOs. They want a strong stock market. They also want lower rates. Like, you look at both of those issues. What happens if they get the rate cut, but the stock prices come down?
Yeah.
What's the calculus?
It's a great question, because on the one hand, the reason why the Fed has kept a monetary policy as tight as it or as high as it has, I think that is because of the fact that we really wanted to bring down inflation. But now, as inflation's coming down, that also, because of the higher cost of capital, is also bringing down GDP growth. So it's a delicate dance that the Fed has to navigate in terms of when is the right time to start to ease off and bring down the cost of capital, meaning bringing down rates, without it waiting too long for that the GDP growth to really slow down too much. And I think that's the delicate dance. We're getting to the point, though, where you're seeing inflation at least approaching 2%. You're seeing the average consumer starting to have more challenge with the higher cost of capital. And so I think that you're feeling like now is getting to be the time where changes in monetary policy would probably be welcomed by the markets.
What would you rather have, though, when you're looking at the IPO market? A strong market or lower interest rates?
Well, I think the question is, are the interest rates really sustainable where they are, given the GDP growth of the country? Right now, we have a 2 to 2.5% gap between where the interest rates are and what the overall fundamental growth of the country is. And that's a pretty big gap. So they could bring down the rates and still have really healthy markets. In fact, having a lower cost of capital for companies overall could actually be a boost to growth. And so it's not necessarily an either or. It could end up being an and.
It's less than a week since the biggest global IT outage that we've ever seen in history took place here. There were some markets overseas that had trouble starting up because of the Microsoft CrowdStrike implementation of that new line of code. There were no problems here.
Yeah.
Nasdaq opened on time. It was great. If you looked at other airlines, there were massive outages around the globe. Some of those companies got up and running more quickly than others. Delta still kind of having some delays and issues that have been out there. And people say that it was because it was so reliant, so heavily reliant, maybe more than half of its systems reliant on Microsoft for that. You've always talked about the importance of redundancies. What happened last week? How did you deal with it? And what's the lesson you take away from this, watching how this played out?
Yeah, so our markets were unaffected, and the technology that we provide to other market operators around the world were unaffected, and the technology we provide to our clientele was unaffected. So we were, largely unaffected. We had some internal PCs that were affected, but we were able to rectify that quickly. So, but there's always lessons learned from those types of situations. So as you mentioned, redundancy is critically important, as well as thinking about your architecture, understanding how the software, both your own software and third-party software, is kind of integrated into your solutions, and making sure that you're thinking about that from a redundancy perspective, I think is a critical part of building that resilience that our clients rely on us for. We are, as a critical infrastructure provider ourselves, we provide critical infrastructure technology now to banks, brokers, and exchanges. So we are constantly learning from situations like this, and I think that's the best thing we can do to make sure that we also look at it and say, how can we improve even though we weren't affected by this particular situation?
Right. Adena, I want to thank you very much for being here. We've been watching the Nasdaq shares. Last I looked, they were up, and we're not going to show it right now, but we did see that those numbers up after. Yeah, okay, so up by about 50 cents. So it's a gain of 0.75 of a percentage point. Adena Friedman joining us from the Nasdaq. Thank you.
Thank you.
After the S&P 500 and the Nasdaq posted the biggest one-day slide since 2022, you can expect more market volatility over the next few months. That's what strategists say, especially ahead of the U.S. presidential election. Many investors are anxious about what the election outcome could mean for their money. And that's where we find our Sharon Epperson. She joins us right now with some ways to calm those jitters. Hi, Sharon.
Hi, Becky. A lot of people are worried about their investments right now. According to a survey from Betterment, more than half of investors are feeling anxious about what the upcoming election could mean for their portfolio. And 40% of them expect to move or pull some of their investments based on who is elected. I talked to a few financial therapists about how to keep election jitters in check and what to do to emotion-proof your portfolio. Here's what they recommended. First, picture your goals, literally. Financial therapist Erica Wasserman recommends posting a photo of what you hope to achieve with your investments on your front door or in your office, a picture of a house, a business, where you want to retire. That's your vision. Then separate fact from fiction. Write down what worries you about your finances and investments. Mark it with a T or an F for true or false. Deal with what's true and what's necessary to help you reach your goals. Put aside everything else. Most important, focus on what you can control. Review and reevaluate your investments. Keep in mind your time horizon and spread out the stressors. Financial therapist Megan McCoy recommends writing down what stresses you, then map out the steps that are in your control that you can take to address those issues, and use that exercise as an outlet for your stress and anxiety. And you can read a lot more about what you can do to emotion-proof your portfolio by going to CNBC.com/yourmoney.
Sharon, very quickly, what are some of the misconceptions that can exacerbate the concerns that investors have?
I think people have a lot of what-if scenarios that they're running through based on what they're hearing from politicians about what the promises are. But that's not policy. That's not necessarily going to happen, and will take a while for that to be implemented. Also, I think, one person wrote to me, said, I'm just going to park my money in cash until this is all over. No. You want to make sure you're diversified. You want to make sure that you understand that there's going to be a lot of volatility ahead of the election. But history shows that we actually see stocks perform pretty well after the outcome.
All right, Sharon, thank you very much.
Sure.
And that's the pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern for the latest business news headlines, interviews with CEOs, and health tips.
Everybody needs an obesity drug.
Thank you.
But get the best of our show, the smartest takes and analysis from all of Squawk Box in an easy-to-listen-to audio-first format when you follow this podcast. Hit that follow button and get Squawk Pod every day. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.